Hey everybody, Chuck Barone. Tuesday, January the 10th, 2023. Another day in paradise, everybody. I'll tell you what, interesting doings, interesting times. We're going to keep you guys informed of everything. I got a good report today. A lot of interesting stuff happening that you guys need to know about. Just wrapping up the day in the markets today. Stocks, well, not very exciting day. Up very small, well, up a small day. The market having a little bit of a rally. I think that this market's kind of drifting right now. It's pretty much day-to-day data-driven. Whatever the news of the day is what's kind of driving this market. There's no real direction to it. I think, the natural tendency in stock market is to want to rally. There's usually tends to be more bulls than bears in stock market. So I think on days like today where there's just really not a lot happening, not a lot of news, everybody anticipating Thursday and Friday, so the kind of stocks just tend to drift a little bit. Now the bond market, on the other hand, was a little different today. Bonds selling off today. The bond market's been hot. The yields have been coming down pretty strongly, but today turning around. The 10-year actually rising 10 basis points today to 3.62%. That's a pretty strong one-day rally, 10 basis points. The 2-year rallying 4 basis points. Well, I shouldn't say rallying, falling. And now the yield rallying 4 basis points to 4.24%. So this bond market's just wacky too. I think that, when you have an overnight rate higher than a 2-year rate, higher than a 10-year rate, it's just the bond market looking pretty red flaggish about recession and what's going to happen in the economy. I think that, I think where these yields are, enjoy them while we have them, because I think they're going to be a little bit higher than this coming up pretty soon. The dollar today, basically a no-event day, basically flat, 103.28 on the index. Not a lot happening in currencies. Everybody holding their breath, waiting on Thursday, Friday's data. Metals today mixed. The gold market rallying, man. Gold wants to go up $5.70 today, $1,877. I don't really think gold 2000 now is something that's going to be a big shock to anybody if we see it. I think metals want to rally. I think as the dollar comes back down to earth, because 103 is still a very strong number for the dollar. It's going to come down from there. It's not going to stay those numbers forever. As that happens, however long it takes, gold's going to continue to rally. Silver, however, today surprisingly down just at 5 cents, but $23.58 per ounce. Still a decent number for silver, but not actually rallying in tandem with gold, which is kind of unusual. Anyway, metals market's still looking solid in my view. Oil today up small. Barrel of West Texas Intermediate sitting at $74.86, up 23 cents today. Not a big day for oil. Oil prices, in my view, from where they were, looking at $100 per barrel, still pretty reasonable. I would like to see them come down, obviously, like every American, but, if the price of gas stays where it is or goes down from here, you won't hear too much screaming and yelling. It's only if it goes up from here that you'll see upset Americans. Bitcoin today up $219, $17,462. In my view, I don't know. I think that this continued Bitcoin rally, I think it's up around $1,000 from a recent lows. Wow, I'm surprised. I got to admit that. It's not that I'm not a fan of cryptos or Bitcoin. I just don't like this environment for those right now. So this rally, figures, right? Anyway, in news you guys need today, we have St. Jerome in Sweden. This is the catalyst for the day today. It was an interesting speech today for the chairman. Light on policy talk. He didn't really talk much about, rates and the direction of rates. The key takeaway from the speech was his talk about Fed independence and how, because the Fed is independent of political pressure, because they're not beholden to political pressure, they can do the right thing, or at least try to, without that kind of worrying about short-term political ramifications from decisions. He talked about how they need to preserve that. He said that price stability should be their focus, and the Fed should stay away from political stuff, like talking, obviously the liberals want the Fed to consider climate, green energy in their policy decisions. Everybody has their takeaways they want. And Powell strongly saying they need to stay away from that stuff to preserve their independence. Once you get on one side or the other's bad side, it doesn't work out well. The Fed already not exactly well loved in the halls of Congress. So Fed's Chairman Powell's speech today, not really a big event, but in my takeaway from it, what I took away is there's going to be, the Fed is preparing everybody now for the fight that's going to come between the political class and the Federal Reserve. See, this inflation fight, everybody's talking about interest rates and pretty much that's it. But there, other than monetary policy, which is the Fed's domain pretty much, right? How many dollars are out there? What are they worth? What are interest rates? That kind of stuff. The other side of that coin is fiscal policy, government spending, government debt, because big, tremendous amounts of government debt pervert the markets. They just do and have been doing it forever now. So you have the fight going to come because these two parts of the opposite sides of the coin are not in the same page here. The Fed wanting to slow the economy down, wanting to slow down the velocity, to slow down money, slow down growth, to bring this inflation down. The government, on the other hand, spending like drunken sailors, like they actually can just conjure up money out of thin air and spend it, and there's no ramifications on that money now or forevermore, which is the pipe dream of politics. So I think Powell's speech today was just a little bit of foreshadowing of what's going to be coming between the Fed as they fight their fight, the government as they do their crazy, and there's going to be some friction between the two. And Powell, I think the emphasis on the independence, foreshadowing that friction. Today, another interesting thing I was reading today. So the gold rally has been rocking and rolling, right? Gold's been going up, even just from where it ended last year. It ended 2022 at 1824. 1877 today, pretty nice rally in, 10 days? Okay. Gold's having a nice little run. So today, our friends at JP Morgan finally coming out in favor of gold, saying they believe that gold will average $1,860 per ounce in the fourth quarter of this year. So I guess they're guessing that gold's going to pretty much hold steady for the rest of the year. This is great news for gold people, gold investors. Happy times, guys. JP Morgan has been undervaluing gold, trying to suppress the cost. Got caught manipulating gold prices, had to pay a big fine. JP Morgan talking about gold rallying and sustaining rallies. And even though they're lowballing the number, is great news for us because last year, in their guru came out and said gold would end 2022 at $1,520 per ounce. So they were only off by, $300 or whatever an ounce. Comical, guys. So JP Morgan kind of indirectly giving a bullish signal for gold. And finally, to wrap up the day, guys, the news that's not great. Consumer credit just exploding like crazy. Consumers borrowed $28 billion in November. Now, shockingly, that was down from $29.8 billion the month before, which might have been got to be some kind of record. They expected it to go down to $26 billion, so 28 was much higher than they thought it would be. Terrible news, man. Consumers just borrowing money like crazy, following the lead of the government, not listening to my advice, but I hope people listening to this show are. If you are, you're doing so much better than these average consumers. And here's the, if you dig into those numbers a little bit, here's what was really kind of crappy. So overall, consumer spending up 7.1% through November of 2022. But here's the thing that really sucked. Revolving debt, i.e. credit cards mostly, right? Rising 16.9%. Boom. Oh, big number. That's up from 10%, 10.3% the previous month. Meanwhile, non-revolving debt, i.e., example, car loans or student loans, they were only up 3.9%, down from 6.9% the previous month. So demand for non-revolving debt, half, right? So that's just telling us, as we've been reading about it, we've talked about it here, cars not doing so great right now, overpriced, overpaymented, everything about cars is expensive. Used cars coming down in price, people believe they're going to continue to, so they're kind of waiting that out. So an interesting take, so non-revolving debt, much less demand. At the same time, revolving debt rising 16.9%. Much more demand for consumer debt. It sucks, guys. Interest rates are up on the payments on that debt. People that are borrowing on credit cards, typically they're not borrowing from a zero and then starting now going to make payments on a loan. People that pay their cards off typically do every month. People that don't are still charging. They're just adding onto their principal balances. That never has a happy ending, man. And so you suffer until it blows up. Bummer. Anyway, guys, we really appreciate your support. We appreciate all you guys do for the channel every day, watching the videos, your likes, sharing the videos. As always, we appreciate your support. Ask your questions and comments. We'll be back tomorrow as we creep closer to the big day, CPI. Tomorrow should be an interesting trading day. A little bit of data coming tomorrow as well. We'll see you then. Until we do,